I'm Rhonda Legge, and it's great to see you again. If you've been enjoying the content on this channel, be sure to subscribe and hit the like button. Also, tell your 10 million friends. I've got some charts I want to share with you on today's episode, beginning with the 2023 year-to-date performance chart that maps out some key asset classes. And you can see the runaway winner this year has been Bitcoin. And you see it's gained over 104%. That's your top dog. And a lot of folks waiting for a spot Bitcoin, spot Ethereum ETF. It is coming. We don't yet have a date on that, but it is coming and it will be a big deal. The SEC continues to lose litigation. I've lost count of how many losses they've had, but they're stacking up. They're basically the worst team anywhere on Wall Street in terms of litigation so far. As far as crypto-related litigation, they continue to lose. And so eventually we're going to see spot Bitcoin prices or spot Bitcoin ETFs. And certainly I think prices have been lifted in expectation of that coming. And as you can see here, the bottom performer on this chart has been two areas that have been stinkers, global real estate and, of course, bonds. And as I've been hammering on this channel, bonds are not, if you're using them for safety, they are not a source of safety. They have no place in your portfolio's margin of safety bucket. They can go in the core or the non-core, but you should not be using them if you're looking for principal protection, if you're looking for zero volatility and liquidity. That's not the type of asset that belongs bonds in your margin of safety bucket. Now, in terms of other happenings, this is a chart that was sent to me by Dave Krinces over at ETF Portfolio Management, and this highlights things from a different perspective. It focuses on technology versus real estate, and this is a pretty stunning table here. You can see the triple Qs with leverage have outdistanced everything, and then you've got the triple Qs with no leverage, which have also outdistanced not just the S&P 500, but then these two areas, VNQ, focusing on real estate, and then home builders, which have not delivered strong 10-year returns. And now with interest rates rising sharply, these two areas are going to struggle even more. This is another chart sent to us by Dave at ETF Portfolio Management, and this takes a look at the triple Qs versus some chip stocks out there. You got INTC, Intel, what you might call a legacy, old school semiconductor stock, and the triple Qs performed 4 times better than Intel. It's interesting to note Intel relative to some of the other chip stocks that have been more innovative, arguably, like NVIDIA and AMD, which have easily and effortlessly outperformed Intel. But again, that theme of technology being a strong performer has continued to play out over the past 10 years. Now, one of the things that has really been exciting with technology, and this is an ongoing development, we've heard a lot about it this year, has been artificial intelligence, also known as AI. And I was really blown away at some of the stats that was shared here. This was on the X feed of Jeremy. I don't know how you say his last name. I think it's Owang. But ChatGPT already has 180 million users. There's over 9,000 AI projects. And there's 1,000 new projects being added every single month, which is unbelievable. You got nearly every venture capital firm is investing in AI. Most tech companies, large tech companies, are focused on AI. And over 100 plus AI physical events in the San Francisco, Silicon Valley area per month, which again is another incredible stat. So this is a trend that's here to stay. It's going to penetrate all aspects of our life. It already is, from customer service to powering our homes, powering our automobiles, our mobile devices. AI is embedded in business. It's embedded in daily life. It's embedded in the economy. And you have to own technology if you're going to participate in that uptrend. This is another chart illustrating what I like to call the undiscovered, well, I shouldn't say undiscovered, but underappreciated asset class. I'd say if there's one area of most portfolios that's missing, it would be to commodities, which are a major asset class. This particular chart shows that they've been a great performers over the past 3 years. SDCI is what we would call a core commodity ETF. It aims for diversified exposure to that area, and it's been a great performer. It's beaten the S&P 500 pretty handily over the past 3 years, gaining over 106%. SPY up just almost 27% over that time frame, which again is an impressive return for commodities and SDCI. That's a 4x, almost 4x return in favor of commodities. Also, SDCI has outperformed many of its peers, which are better known peers like DBC and GSG. So check out SDCI, put it on your watch list. In terms of other things related to commodities, we just published our Q4 commodities guide, and it's available for all of you to download for free. I've got that in the description section below. This is one of the many ETF guides and reports that we publish every quarter, and so it's available to you for free. You can download that in the description section below. Also, if you become a free ETF guide member, you'll get this automatically delivered into your email inbox. And we publish reports like this every quarter at no cost. And when you become a free member, you also get a chance to get invitations to our special events and live webinars. Also, access to my online training courses. So become a free ETF Guide member. The links are posted in the description section below. This is a poll that happened right here on ETF Guide TV. I asked you, how has your investment portfolio done this year? And I was kind of surprised that 17% of you did not know the answer. We got to get that 17% to get more engaged with their investment results and what's going on with their portfolios. And then 52% admitted and humbly admitted that they've performed worse than the S&P 500. And it's been a kind of an interesting year. Stocks have sharply rebounded from their 2022 butt kicking, but some investors may have jumped out and mistimed the market, and others just maybe had the wrong asset mix, or maybe not enough equities in their portfolio, or maybe the wrong equities. So this is just just kind of a snapshot of where you guys are at. And of course, the purpose of this channel is to help you improve your investment results. I've got lots of things that can help you do that. Of course, my latest book, which is called Portfolio Architecture. You can hit the description section below for the download link to that. I also just published 2 brand new videos all about tax positioning and tax loss harvesting. So you've got another couple of months left in 2023. And so now is the time to be looking at your portfolio, refurbishing it, reallocating, making some tweaks. Tax loss harvesting can certainly help you to get rid of some of your stinkers and, of course, reduce your tax bill. But you've got some important deadlines that need to be met. I've got that in that video. And then also the importance of having correct tax positioning and why higher tax rates ahead are coming, but you want to be doing this right now. You want to make sure that your investments are correctly positioned, and that's quite different than tax loss harvesting. So be sure to watch both of those videos. I've got links in the description section below. And of course, if you become a subscriber to ETF Guide TV, you'll automatically get these videos sent to you in the feed. I'm Ron DeLegge with ETF Guide. Thank you so much for watching. Hit the comment section below. Let me know what's on your mind, and we'll see you on the next episode.